Welcome back. In the midst of a pandemic and volatile investment markets, now more than ever, it's crucial to manage your money effectively and for the long term.
Now, here to talk us through the key pillars of financial planning and how to manage your money is Paul Merriman of askpaul.ie. Good morning to you, Paul.
Good morning, guys. How are things?
It's nice to see you in the flesh. I think to start, Paul, we should talk about COVID, not only the fear it's caused, the financial damage and the impact it's had for people.
Yes.
So when we talk about money, there's a lot of people who have a lot less of it.
Yes, of course, and you have to be conscious of people watching this morning that may be in a very difficult financial situation. So I think if you find yourself in this situation where you may have lost your job, or maybe you have lost two jobs in a household, it's obviously going to be very difficult. The main advice is not to bury your head in the sand and to reach out. So whether it's reaching out to the bank or the credit union where you have your personal loans or whatever's putting you under financial pressure, and talking to people as soon as possible. So pick up the phone to the bank, and then also there's likes of MABs out there as well. So MABs.ie, head over there, the budgeting services, and they will help you negotiate and try and get various different options with banks. The mortgage has to be the big one, really. You know, if you're renting, rent increases are now not allowed, and you can't get evicted till next year either. So again, it's just about communication. I think that's a really good thing for people to do, is to communicate with people.
Your income is your biggest asset.
Yes.
So when that's threatened, how do we prioritise what we should be spending money on? I mean, there's the mortgage, extremely important.
Yes.
But there's also putting food on the table.
Yeah, which is equally, well, more important.
More important.
Yeah, very more important, much more important. I think what happens is when it comes to people going into, when they do lose income or they do lose a job and income stops coming in, they have to go into defence mode, and you have to look over your own house first. So I'd be putting the mortgage, you can't continue mortgage holidays if you've already taken a big mortgage holiday due to EU regulations. So what you can do is negotiate with your bank with other options under the MAPS process, and that allows you to maybe take a interest-only approach. There's various different options depending on your circumstances. So I'd recommend, if you are in that situation, again, Lawrence, to go over to the centralbank.ie. There's a form there called an SFS, a standard financial statement. Fill it in, get used to filling it in, then approaching the bank, and they'll come to some resolution with you. But I think take that out of the picture as soon as you can. Yeah. Is probably the best thing to do.
Paul, you have interesting stats from the 2019 CSO results on full-time workers, because we tend to think about the paycheck at the end of the week or the end of the month, or maybe what we earn annually. But when you tot that up based on the average, what we earn in a lifetime, is a phenomenal amount of money.
It's a phenomenal. I say this to clients all the time. You know, when we do financial planning consultations, we show clients what they earn over a lifetime, and some people are blown away. Like, it's a couple of million, and then if you have a partner or you're married, you have a spouse, it can be 4 million worth of income nearly coming into the house, and that's based on, I think, the average wage for average full-time wage just over €40,000 per year. So over your lifetime, you're going to earn about 1.7 million, and if you multiply that by 2, you know, up to 3.4, and then that's without any increases as well, or people earning more than that. So yeah, your income is your biggest asset. And I always say this to people: the number one thing everybody should be doing, there's kind of 3 steps we take clients through. First one is to protect what you have, then it's to grow what you have income-wise. We'll talk about in a second, and replace. But protecting is very important. You have to protect what you have, and your income is your biggest asset, you said, Aidan. So putting like the likes of income protection policies in place, making sure your mortgage is protected with a good mortgage protection policy, and making sure your kids are protected from a life insurance point of view. There's various different things you put in place. But yeah, you really have to, the first part of a plan is to protect what you have. I think that's very important.
If you're lucky enough, Paul, to be one of the people out there whose income is protected at the moment, how can you grow the income? Because presumably a lot of people for this lockdown, like the last one, will have a few extra quid in the bank.
A lot of people have extra money in the bank account, and a lot of people can't spend like they would have been spending before. And think about it, this second lockdown is giving you the chance to not spend and not to waste money maybe as much as you would have done in the past. So it's getting to reset. So what I'd recommend here is that if you have any outstanding debts like credit cards, car loans, personal loans, any kind of small debt, to try and clear them or get on top of them, or an overdraft or something like that. But after you do that, you really have to look at growing your income, which is investing. You know, the interest rates in the banks are appalling. They're low, they're zero, and they're talking about going into negative interest rates. So if you've got any type of a decent lump sum in the bank, you should be investing. The investment markets took a massive dip at the beginning of COVID-19 and rebounded to all-time high again. So that's over already. Now, we'll be more volatile in the coming weeks with the Trump elections and various different things, but you should be investing a small piece of your income, guys, for a 3 to 5 year period. So whether it's something like the children's allowance of 140, or whether it's 200 or 300 quid a month or 500 quid a month, it's very easy to get involved in those. And we do all this on our Instagram page, the Ask Paul Instagram page, where we have an investment strategy for people, and there's hundreds of people following. It's really good to see people's money earning more for them, because the banks and the credit unions, they're great for emergency money, you know. So if you need to keep an emergency fund aside, and that's a great place for that. But you couldn't be putting long-term money in there. It's madness.
So invest, even though there's probably a sense among a lot of consumers that of fear, and they're nervous of this happening again. So you just want to protect what you have, hold on to it, whether it's in the bank or under the bed.
Yeah, but I think you have to do is look at the long-term view. And like, if you look at even like the financial crisis, it was so appalling when that happened in this country and people lose their homes. We got out the other side of it, and markets literally went, like, I think over 100% over the last 10 years, like phenomenal growth. And that will happen again. We will get through this. So there's, in my opinion, there's no point in keeping large lump sums in the bank, because all the bank do, if you take a main high street bank, they might take money off me, say 20,000 in the bank, and you might want to borrow it, Laura. They're taking off me and giving me 0 and charging you 8%. Like, you're literally just giving the bank money to lend to your neighbour. It's pure, I think, madness. I think people don't realise how easy it is to invest. And that's why we developed the Ask Paul investment strategy. It's on our Instagram page for anyone who is interested. But it's so easy to get involved. And you can get involved investing from like a €75 per month. You don't have to have millions or hundreds of thousands. And that's what people forget as well sometimes. It's actually very easy to make your money work harder for you.
So essentially what we need to do is our homework.
Yes.
For all of these things. Doing our homework in terms of clearing potentially any debt that we have.
Yes.
Doing our homework if we are worried about our mortgage or big outstanding loans. You're saying communication is key.
Exactly. Yeah, communication is the main thing here, and you have to keep communication channels open.
Okay. Listen, thanks so much for joining us today.
Great to see you.
Some great tips
there.
there.
Paul.
Cheers. Thank you.
Thank you.